Hi, a very good afternoon, everyone. While the others join, I know it's a post-lunch spot which we have got, so we'll try to keep it engaging and interesting enough for everyone to be awake. So let me start let the room fill in. But in the meantime, let me start with a human touch that most of us would have done UPI transactions probably today more than once, and many of us would have also probably at some point of time would have a little bit would have faced a failed transaction also. But here's the point that none of us would have thought about the underlying infrastructure while doing those transactions. None of us would have thought what are those underlying connectivity and the infra layer which is making all these transactions possible. So, and it's not only the UPI, but also the other larger transactions in terms of, say, trading, the high frequency trading, where a microsecond also matters in terms of whether the trade is a successful trade or whether it's a missed opportunity. So this infrastructure is enabling, from a quantum perspective, it is enabling almost like 650 million transactions every day. And it is enabling the high frequency trading where microseconds also matter. So this panel discussion is going to be more about how is this enabled from an infra perspective, from a connectivity perspective, the world where the speed is non-negotiable and also where the failure rate is non-acceptable. So how is FinTech enabling all these things? So we are going to discuss both the supply side from an infra perspective, what is happening on the ground, and also from a demand perspective, what are fintechs demanding to enable this UPI ecosystem and other transaction financial ecosystem well capacitated. So with that, let me start with a quick round of introductions. Probably Shiva, if you want to start.
Sure. I am Sivaramakrishnan. I am the CISO for M2P FinTech. I have 25 years of experience. I started with the bank, installed the ATM. That's where payment was within me, where I started doing governance, implementation of switch, issuing cards. Then as it comes in on digital, whatever we have on online payments, I have done it. So all the certifications of PCI, DSS, SOC 2, so on and so forth. Security is a passion. So I have been that curious cat who wants to know how a fraud happens. So again, starting in the bank, you started looking into how the frauds happen physically. Then you know that as it moves into digital, how that is happening. So the underlying psychology, how people get scammed, this is all my passion to understand how it happens and then try to fix wherever is possible. So yeah, that's me in short.
Nice. Santhosh?
Hi, Santhosh. Around 3 decades in infrastructure. So started when today people are talking about data center. Back in 1998, when I built the first data center, it was like not even 500K VA. So you had 3 or 4 racks, and we used to call server rooms. Today we are talking about in a scale before I came out. So a midlife crisis or whatever you call, I thought corporate is enough, and I quit, and I started doing advisory roles and farmer or a planter growing coffee in Coorg. But why am I sitting over here? That's a $1 million question. It's the passion that brings you. So coming back to the technology side, what I was doing was, so if you talk about the scale, today you're talking about 40, 50 kVA per rack. Okay, you're talking about gigawatt, which was never even we envisaged. So I'll come when I have some few questions coming around, talk about it. So yeah, cutting short, 10 years, last 10 years was with ICICI, and before which I was with product companies like storage company, NetApp, and 10 years with VeriSign. So that's the overall. So 5 years, where you can think the gap, that's all small startups. Thank you.
Yeah, Srini.
Yeah, my story long short. After my college, I thought I was very bad at coding. I wanted something which is no coding, right? That's when I decided security was one of the areas where I don't need any coding skills. So I was supporting for the Symantec antivirus and Norton products there. So I was making my customer happy and solving the problems. But I wanted to understand how that actual building of a security solution happens, right, behind the scenes. So then I moved into Symantec, was working there as a product engineer and then as a product manager as well. But then, at least in the last 14, 15 years, it's completely into BFSI, working with Standard Chartered, Citibank, and then also the fintech banks like Revolut, like they are the open banking segment where they are into multiple platforms as such. So mainly on the risk and compliance, governance, and all those aspects. When I was an engineer, the governance guys or auditors would come and ask questions, then I don't have an answer, I would fall prey. And that day I took a vengeance that I want to be an auditor or a risk assessment guy where I'll ask questions one day, right? So I've been on both sides of the world as a police and also as a thief. So it's a great journey. And being a person who has had the physical wallet, now also digital wallet, it's a great transformation you've seen through in this long journey. So looking forward to discuss with you guys.
You finally identified கேள்வி கேட்கறது ஈஸி பதில் சொல்றது கஷ்டம்.
Yeah.
Exactly.
Very interesting set of panelists. I had a chance of hearing some of the stories backstage also, and I'm sure audience will enjoy these conversations in the next 45 minutes. So let's get started probably with you, Santhosh. You have seen that journey you mentioned, that you have worked in banking ecosystem where setting up the UPI, you have worked on the data center advisory side. So probably let's start with the basics where we want to understand what does purpose-built network even mean? Like the topic of the discussion is purpose-built network, where different extreme use cases like HFT trading, where microseconds also matter, vis-a-vis UPI, where scalability and resilience matters. So how do you design data centers and the connectivity layer for adjusting both these kind of scenarios from a data center perspective, from connectivity perspective? What are the design philosophies?
Thank you, Pallvi, and acknowledging that I worked with UPI. So when back in days so first and foremost, the myth I would like to clarify is that any network folks over here. Okay. So when they say network, people say, oh, network is the ultimate, or network is the one which is fast and slow. So anything happening slow, blame it on the network team. So, and that's how it works out. And the server guys would blame it on the storage would blame it on the network. End of the day, it is network's issue. So, and network guys can't blame it onto the cable, and because that's again they own it, and they can't blame it on the light speed or the cable technology because they don't have any insight. So coming from there, UPI was a good thing when it started. We had few hits coming in, and it made life hell for any infra guy who is managing UPI, because bank wouldn't have even thought about adding anything. All of a sudden, one fine day, you see PhonePe emerging in, and PhonePe is hitting into the bank, and that in turn is hitting into your accounts. So you have to just not take care of your infra. You are responsible for, I can take an analogy, it is like your garbage system. You're not just responsible for your own house garbage. You're responsible for the entire ecosystem because they're all sending data to you. So you have to take care. So coming back from that, if I compare HFT and UPI, so these are two different network itself. One is that it needs very close to the system. So in HFT you need you have the banks, you have the other people, but the HFT guys has to be next to the NSE or the BSE. So connectivity is very prime. It has to be very low latency. So you use these switches of Mellanox, or you use this FGPA cards and things like that which would help them to code better, and it will be in the memory. So when anything gets lost over there, it's okay for from a trade perspective. You are not hitting at 320 rupees, it is okay. You can see the next prospects. But what in UPI it is slower. It is okay to be little bit microsecond delayed, but you can't afford to be a transaction to lose. But in HFT, if a transaction loses also, it's okay. because you will see the next opportunity. So I'll take an analogy of, sorry, I told you, sir. So I'll take the analogy of the Grand Prix versus local train. I would say the Grand Prix one is like your HFT and your Mumbai local train is like your UPI. Here you have millions of mass of people in UPI hitting every day. There you have a small set of people, you know this over their speed and the distance. That's the key thing in which you win. Here it is not about the speed, it is about sustaining. The transaction has, here you can't fail, there you can fail. So from a network perspective, somebody is building a data center, I wouldn't say that you can build it only for high level transaction and UPI. So in today's world, building a data center is very, very, very costly. People are talking a lot about data center coming up and doing certification, things like that. But the cost of owning a data center is very high. And if somebody has to invest, so you have to make it compartmental. You have to make it modular, wherein you have one segment saying that that is for HFT transactions, another one which is for a high volume, and both are interconnected. So things like that, innovatively somebody has to look forward, and you can't build a purposeful data center because then you will be building the data center and waiting for tenants to come and the business will not grow. So that's a long story.
No, no, that's very interesting and very nice analogies, I would say. So, as you rightly put, it's very costly to set up data centers. And if I extend it to UPI ecosystem, with the scalability of the UPI, we are still seeing some kind of outages, and those are becoming national news also. So, what is ecosystem doing in terms of, say, DCDR or BCP setup or failovers? How are they handling it? And there is always a debate between resilience versus latency. So how does that play out in UPI ecosystem? So Siva, if you want to take that up.
Fair question. In fact, it's an excellent question. So we are one of the PSPs who have to support this ecosystem. So I understand how things have changed in last year. So let's dissect this failures what we are speaking. It was not being discussed before 2025. All this started in 2025 actually. So there were few events I want to just elaborate on what happened and what we know and how things have changed. It will make us to understand what we are working on and going towards that. Then we know between that question of resiliency and latency where we are and how are we reaching it. So first and foremost, this happened, this is all between March to August in 2025. So most of you, if you have been in any shops, anywhere doing this transaction, you would have felt it, or you would have read it in the newspaper, or you would have seen in your Instagram post talking about it. One of these three you would have definitely knew, right? So this started in March 26th, where we had some intermittent failures in UPI. That was okay, no complaints, it was not in media, nothing. We knew because it was happening, we are supporting systems, when it is happening we will get to know, so we knew. Then the next one happened on April 1st and 2nd, which were multiple failures which came in media and which has been discussed on that. So this all at that point in time was looked into as a year-end data pressure, which is basically during the year-end there will be a lot of postings happening. Because of that, there is a performance, probably we blame it on our friend here. In the bank side, there are more performance elasticity problems. So this is happening is what it has been looked into. So it was brushed. Since April 2nd, there was no conversation, nothing, everything went smooth. Then all the hell broke loose when we talk about April 21st, where I think that's the largest downtime in history of UPI since NPCI set it up formally. 5 hours of downtime we had on April 21st. That 5 hours of downtime is approximately considered like, we got to hear when we started the conversation, a transaction is like 600, 700 million per day. So with that 5 hours of transaction on number of attempts made, it is anticipated it is between 1 billion to 2 billion transactions. That was huge, right? So that was one. Then the other one happened was in August 2055, right? The August 25th was not that bad as this 5 hours, which was going in the situation of, I'll explain why that happened also. So when we talk about this August situation, that was more on couple of systematically important banks and PSPs. If they fail, that would have a noisy neighbor. I mean, again, Santhosh mentioned about network people being here, but if you're not there, that's a parlance we use a network called noisy neighbor problem, which is basically one tenant's problem propagates to the other tenants. We have a problem. So that is what happened. So these two made, of course, everybody to come together, NPCI, RBI, because we have moved from an ecosystem, I mean, not just Make in India or India being great. If you are exposed to the international markets on how the payment ecosystem works, we are really superior and far nobody else even coming close to us. We are really, really far ahead. So that name, that reputation we should not be spoiling is the whole point. And we have created that ecosystem where dependency came in. After Demon, the ecosystem becomes so dependent on it. Like you go to the tea shop, your default is always taking your phone and doing a phone pay or GPay rather than you looking into a cash. We forget even bringing cash, taking out wallets, physical wallets disappearing, everything moved in. So, of course, this is very serious. So, all these three people came together, NPCI, Certain and RBI came together. So, they came together, did the analysis, what all happened, then some changes have been made. So, let's talk about the April incident. That issue was I mean, it is not even believable when you look into retrospective today. What happened at that time was a funny issue. It was not the failures of the transaction which had all this happened. It was the status check of the transaction which created a tsunami. So you have a transaction, the transaction failing, immediately the PSP, your PhonePe and GPay world or the bank is trying to check the status automatically in X seconds. And he is checking it, the transaction comes back, you don't get a response. He check another one, he don't get a response. There is NPCI's defined guidelines available telling you to check it once and next time. But on NPCI's side also, they didn't put in any throttling that I will not allow beyond this time. That became a big problem. So that was identified. Then that what we call it as cheap APIs, which is basically doing a balance check, account list, status validation check. All those created a big issue, which what they did basically is they fine-tuned it. How is that fine-tuning done? Is about making the restriction in the LB level, load balancer level as a throttling for individual participant, how many transactions he can hit for those APIs. So that one part, that is on cheap APIs or non-financial APIs I will put it. The next part they did is about really fine-tuning in their end on the financial APIs to become faster. So respond without any issues. This too was done on the NPCI side. Then comes the August issue, which was on the bank side, where, okay, they made our life difficult in a way. Another way I will say it very happily that my team is secured during all this mass layoff. That is because they have put in more controls and I have to do more validations. So what they did now is they made, it is not no longer you have a DR, you are doing a backup. So what they did is they made systematically how do you do your resilience, how do you switch over, how do we ensure your RPO is near zero. No longer we talk about RPO being 10 minutes or your RPO being 2 hours, right? Both of them we are talking now are near zero, right? So telling about and showcase. None of this they are telling you that you are having it. No, they are asking you to showcase. And showcasing if I do, they say you don't do it internally, bring in a certain auditor, make your certain auditor to validate all them and give a certificate. So these two have been done, which has really made the ecosystem both sides. So basically that is in the two sides of the coin, right? Like one side it was on the ecosystem side on NPCI level for the UPI, and other one is on the bank level. Both of them have been fine-tuned. So to answer your initial question, whether it is resilient or is it quick enough, I think there is a classic which Srini would accept with me is about in security this we often face when we go for budget. How much of security is required is not unlimited, though we really wish that it needs to be unlimited. But the point is, it is all on ROI, how much I can also do it within that ROI, right? So we use the classic word of just enough. So what you want as security is just enough, is what here also. So to answer your question, probably when you are doing a swipe now, then 2025, you may be waiting for another few hundred microseconds, but actually that is worth it. That is what has ensured today that there is no failure since August, and NPCI beefed up the team. There is there is full range of governance, security, and architecture. A lot of people have been also brought in new. They are having regular connect with this. So the resilience has improved. Latency has a small hit, but you won't even feel it, and it is much better for you. I'll put it like that.
Yeah, very interesting. I think the ecosystem level, different players have been playing a part in enabling this latency and resiliency across. So one more thing which is typically talked about is the data part, data sovereignty. So I'll come to you, Srini. You have worked across global banks, be it Stancy, Citi, and Revolut, and also in ChargeBee. You are handling global clients. So how does data sovereignty play out in such context, especially with GDPR and in global world and DPDP in India? How does FinTech look at data sovereignty and data governance aspects?
Yeah. Because when both of these people were talking about scaling, being more efficient, etc., right? Then I come and say that do it, but do it this way, right? That's where I come in because a vehicle needs a brake, right? A vehicle needs a control, and only then they can sustain for a long time. And now with EU GDPR coming in, and then with DPDP coming in, right? Now it is no more a compliance checkbox. So data sovereignty and data governance are the your home construct of an organization. You cannot leave it aside and say that I will do it later. So now once DPDP has been rolled out, right, everybody are now hanky-panky, right? Now what do I do? When a customer is going to send you a request for data deletion, we call it a DSAR request, it takes immense amount of time for me to trace my data of a customer. I need to write a script, do data crawling, and then look at all the data because the data footprint is everywhere for a customer. So now what we have done is we have trying to restrict the data what we get from customers by minimizing it, ask only what we need, how long we need, why are we using it for, and what will happen once you leave us as a customer or as a third party consumer. It doesn't stay with them as well, right? It goes to our vendors and fourth parties also because they are also consuming our data via APIs and all those channels. It more than important for them to look at this as a checkbox item, then look this as a privacy by design concept, right? We always talk about security by design and all those things. That is, we are almost there. Security by design is now inculcated into every department, into CI/CD pipelines. We had DevOps earlier, now it is DevSecOps. So that principally it is there, but privacy by design is still catching up, right? When I say I want to scan my data environment across multiple locations, application, database, server, etc., it is immensely challenging. When I have to be on the calls with the customer on the legal grounds, say that your data is deleted and then this is what her traces were in, I had to keep my heart out and then give some statement which is acceptable to them but not acceptable to me. Right? so that is how we have to win the game there. But the timelines are changing, revolving a lot. Now, any bank you take up, right, could be a bank on a scale of City, or it could be a fintech bank like Revolut, or with a subscription platform like Zora, ChargeBee, etc. They're all now API driven, right? They're API first driven. So this API design layer is what we're now concentrating a lot in terms of data anonymization, data security controls, and then we have all these AI agents being placed at various sources. Now we are treating AI agents also as like a human employee. We call them as NHI, non-human identities. So as I join an organization, they'll also have an employee ID, they will have their identities, they'll have their privileges, and as and when they use the agents, we will see what are they connecting to an MCP connectors, and what data they're pulling in, what they're sharing it out, data exfiltration, all mapping is done. And once I leave the organization, agent will not stay rogue. It has to also kind of sunset it down, right? That is the parallel world we're looking into. And in terms of people layoff, which Satish mentioned, right? The same concept. We want to be more leaner, more meaner, and more stronger. So means monotonous activities can be given to the agents, but we'll not let them decide for us. We will decide, but enable us to or augment it for us to make a better decision. That is where we are doing now. So one person today in my team, I don't have one person doing one job, right? He's a solution architect. He is a scrum master. He's a project manager. He's also doing the business analyst role. That is the way the world is also changing today. So all these privacy aspects from GDPR and AU, etc., is everyday activity for us now. but we need that horizontal plane which will look at data governance, privacy by design, security by design, all one horizontal planes where we can have more observability coming in. So observability aspect is what we're trying to stitch from various aspects. So it is very important. It's not a checkbox activity anymore. Now the focus is on identifying data footprint and reducing your data collection. These are two areas of focusing. Yeah.
Very nicely put, Srini. I think you touched upon privacy by design, very important concept. And one more thing you talked about is AI agents. So I want to probably focus more on that for the next question for Santhosh also. So AI is now becoming the talk of the town, and fintech is no exception in that case. So Santhosh, where are you seeing from a fintech and banking perspective? There is demand coming from AI-enabled data center, AI-enabled connectivity layers? How is that? And the current DCs, are they ready for handling the AI load or vis-a-vis those UPI kind of transaction load? What are the use cases coming up? How is data center and connectivity layer prepping up for that?
First and foremost, the hard truth is no banks in India, I would say, is ready for the AI. Because the loads that all the banks were talking is still in megahertz only. So that I'm talking about like 500 rack or a 800 rack would host. So today if somebody is saying that they are AI ready, they would be either co-locating it in any of the hyperscalers. Okay. Even in hyperscalers, the interesting part is that today it's like the buzzword. Everybody wants to know about AI. Everybody wants to jump into data center. Everybody talks about GPU. But if you go and ask literally how many of them have worked in GPUs, you will find a handful of them. Are you able to give an order for a BM 200 or a HS 150 or anything? No. They will say, NVIDIA would say that, okay, there is a lean period. I have so many orders backlog. And in that, who takes the first precedence is countries like US. So can we get it? No. But we are getting ready. That doesn't mean that we can't build when we are like, I'll take an analogy about when you can't just say when you're hungry that you need to cook now. Either you should have had some fast food concepts or you should wait till whoever is married, spouse to prepare or your mothers to prepare, or if you are good enough, you prepare. So right now coming back to our data center stuff, I don't think so any of the, so getting power is a big challenge. So if you say that you want to build it in, let's say in Chennai, you can put it on a paper, you can get companies like us to come and design and validate and everything and say that you will get a 10 gigawatt of a data center. Does the upstream power unit has the capability? You need to work with them. Okay, and building on one side such a huge data center and waiting for the workloads is also not possible. So you need to make it modular, and it's a catch-22 scenario because you can't book power is something like you block it, whether you consume or not consume, he is waiting for that. You can't say that, okay, well, I am negotiating with ICICI Bank, they are going to put 2 GPUs over there, then we will see. So now coming back to the things of like UPI and everything, how the world would change is today if you see UPI is just doing the transactions. So the future of GPU would be wherein the fraud detection would happen in there, the risk mitigation would have over there. If somebody is applying for a loan, instantly would happen over there. So if all these things has to happen, you need to have multiple instances of GPU sitting and for a function like a UPI to go through. So if this has to happen, bank has to redo it or they have to think about. So one thing is clear, most of the banks will never, I don't think so in today's generation, they will go ahead and build their own data center. They would rely on hyperscalers or they would rely on co-location like you have the entities, you have the controllers, you have the Princeton. So people like them, they would be, because they can build that mass and they can manage it. So another thing is that you have a shortage of skill also. You build it, but you don't have people to manage such scale of an infrastructure is a very big challenge right now. So with that, I would say conclude is that the banks or the fintechs are looking into get the workloads like GPU, but that would not be on-prem because right now they need to redo the complete on-prem because they are still in the legacy of I would say 400 kVA or a 600 or 800 kVAs, which is like around 200 rank hosting it. So each rack is around 2 to 3 kVA or maximum 10 kVA. So if that has to come to GPUs, which is like 40 kVA per rack to 150 to 200, you see the scale. The scale changes, the math changes. So the fintechs are still not ready. That's what at least I would make a blunt statement. But if any of my fellow colleagues over here are there in from fintech, they would say, yeah, we are ready. But that would be just on papers.
Okay. Interesting, interesting. So, understood. So, you are saying fintech is not ready. I'll probably go to Siva and pose more or less the similar questions, especially if, from a connectivity and data center perspective, Santhosh covered, but I want to also talk about the fraud aspects. Like with the AI, one of the use case specifically is, say, in onboarding frauds, or the banks are trying to solve some of the use cases using AI, but at the same time, the fraudsters are also using these AI layers for various type of attacks, be it deep fakes or synthetic identity, those kind of things, right? So how is industry prepping for that? As Santhosh mentioned, we are not there yet, but we are preparing for that. So similar, is the case similar in case of fraud also?
Yeah, it's a difficult question, but yeah, because we took almost 20 years. So the ATM was the first attempt to ditch the branches in the bank. So you don't want the branches, let the many be handled somewhere else, and we can make the people self-servicing branches or self-servicing services we will create, so the branch will not exist. The same thing we did for account opening. So you do digital onboarding, you do VKYC, we do CKYC, we do couple of authentication, ask them to come in video, show your hand, show a number, write it and show that number, all of them we did. Unfortunately, all of them has become a problem now with AI, right? So, to your original question, frauds are not new. Frauds were always there. But before 10 years in the bank, if you have to do a fraud, you need to be a crime syndicate. A digital crime syndicate have a lot of skills, money and everything with you to do it. That's what it was. Today you just need a laptop, $20 subscription to an AI tool, then you are there. That is where it has made it industrialized. That is the biggest problem we face today, right? So how do we solve this problem? So, what is the impact? First point is how does the impact it created, right? So all this today can be breached, and it can be breached faster. So the frauds have moved from human speed to the machine speed. We are able to do that much faster, right? So I mean, I think at least 5-6 years we are struggling. Even Honorable Prime Minister Modi also spoke in Man Ki Baat about the digital arrest. It will not happen, right? Because we knew if you are educated, you understand what it means, then you know digital. Because you're reading it, you look into social media, you know that's a fake. Police doesn't do that. But somewhere, somebody in this wide world, I mean, wide India, we have 1.3, 1.4 billion people. Somebody old who didn't know that and they fall for it. That's what it happens. And you can see that the money, once it is siphoned before the police complaint happens, all through legitimate system, the money moves between wallets, accounts, mule accounts, and it goes there. This is all happening already. Now, how this is making it is adaptive. The frauds have become adaptive. Like, assume that your phishing is failing today, then you make a small change with the feedback loop and then another phishing can be coming in. Your voice cloning is failing today, then you look into the tone of the thing, hear it again and then that can happen. So that is the way it has been made easier now everybody is doing it. Okay. So to answer the question again is about how do we solve this problem? We have to look into it correlation. In our cyber security world, we call it as correlation. So not just looking into the person has entered the PIN, the customer knows the password. We need to correlate at what speed he is keying in. did he type in the UPI ID or he copied the UPI ID? He is logging in a time where he usually doesn't do a transaction. That is the way we have to look for first. So which is looking correlation of the events, getting an insights or inference on what it is happening, from where we will get to. This is step one if you have to do it. Then step two is about how do you make frictionless step up authentication. Like if you are doing it from another city than usual, then instead of just doing your biometric, it may also ask you a password. This is the second way we are doing it today. So until now, we are not using AI, we are not troubling what Santhosh was telling. But ultimate is about fighting AI with AI, which we have to do. So you build your defensive mechanism such that. So you should not, I mean, you know AI, how it works, right? You have a data, you train a model, and then you use a question on top of it where it is working. A knowledge base you create from which you are asking in a freelance parallel, right? But here, the old data, old fraud data with which you are creating a model, it won't work. Now you have to look for, you should understand how that AI, what you call it as offensive AI or the fraud AIs work, from where you have to learn and we there in the third part? Yes, we are not there because the underlying infrastructure is also not cheaper for us. It's costlier. Then about controls and security, what kind. But the rest of them are still there. I can still see that none of, I mean, RBI didn't say to stop it. And I still see that there are successful, there are not many failures happening. We are good there until now.
Very rightly put. So we are not there, but on the way. In the meantime, we have to put certain checks, as you rightly mentioned. We have to create a framework for trust and governance and authentication. So I'll come to you, Srini, on that piece. Like how, with all the fintechs becoming more AI, API enabled or API first, more embedded. So how does fintech go about building the trust and authentication and governance framework? Like whether India is already there, is it leading, is it lagging, or in your experience, with your experience across global banks also and other, do you see any learnings from there which India can take up?
See, learnings are there everywhere. I think from India perspective, we are at least in 4x speed how we are growing today because all the environmental changes in UPI has enabled us to grow faster. I would say thanks to COVID in a way because it has enabled this volume of transactions and making it pay from 1 rupee to 1 lakh through an UPI scanner, right? That's a big thing. But still, I have to educate my own mother and father about how to do a UPI transaction and then how to make a non-fraudulent transaction. My birthday was last month, and then my father said that I have credit card points of so much from SBI. Why don't you use that and then buy something? When I saw the message, it was a fake message, not from a usual standard way. What if I was not aware? What if I was busy and then clicking on the URL, right? I cannot go and say to my next CISO saying that I was clicked on this. Shame for me, right?
You can't say the house also.
Yeah. And say, what are you working? Are you real security or security guy? Yeah, so such kind of education is required in-house and also as well as to the community wherein you are in. So this awareness is what we're trying to build in. But from an API-driven standpoint, there's a concept of FAPI, right? Functional APIs. So this API workflow should have an inventory model wherein, for example, a API should have an API key, rotation should have it on a periodical basis, it should have a rate limiting, should have in-house handshake between transactions. The APIs which you give to your vendor, API which you consume from vendor, all handshakes has to be accounted, and wherever you have data footprint of a customer, it should flow parallelly from API transaction to a non-human transaction. Now, we are building AI agents, right? We're just talking to these APIs and pulling data for us. And when I, as a person who has permissions as an admin to get some data, I can only get certain amount of data. But if an AI agent is going to call that API and get data, it can get everything. So there's a clear gap between what an API using AI agent can get and what a normal person can get, right? So I don't know what's underlying data which is getting crawled by the AI agent and shared outside to the external world. At least in our organization, we have an LLM gateway wherein we can consume data from the outside world, but we can't share our data to outside world. In that way, we have a restriction in place. So all these API agents will act as a layer, and we have our own LLM agent sitting between the input layer. Input layer is nothing but as an employee or as an AI application or a AI agent, all my requests will be filtered. Let's say I'm asking that what is the salary of my CEO in the organization. It wouldn't give me the output directly. Right? It would say that this is an unauthorized input which has not given the right value as per the company's privacy policy. You may have to reframe your question or give another question. So we have those guardrails already in place, right? It will match your company's AI agentic policy and look at what does the regulation say and then do a filtration. Not just the input, both the outputs are also filtered. But the leads and lags for India, right? We are very good at UPI transaction, doing a lot of voluminous transactions. And the second space is about payment aggregators, right? Now we can see in any app, ICICI, HDFC, wherever we use, we can see payment aggregation. Across all your bank accounts, what is your bank balance today? What are transactions you have made today? So I need not have multiple apps. In that way, this is a very large scale improvement which you have seen from India per se. But having an harmonization of APIs across multiple platforms is where we're lagging currently. That needs an evolution to go. Maybe next time when we are sitting here, I would have a better story to talk to you. Right? That's where we are in.
Yeah, definitely. We are hoping for the same. So I think we still have some time. But not really. We no, I had prepared for some. Okay, then I had few questions for rapid fire, but because of time, let's probably close at that. Maybe I'll summarize by the way that while we keep hearing about the fintechs in terms of the apps and the front end layer and the customer awareness, but there is underlying layer which is typically an unglamorous part of it which never gets talked about. So the fintech is working on that areas, and maybe next time when we are doing a UPI transaction, we will be able to little bit appreciate it more, the underlying infrastructures being put up and the firms which are working towards that. So with that, I'll probably conclude that. Any questions if anyone has, happy to take.
Check. So the recent DPDP, those things and all came where customer can erase their data completely. For example, we as a fintech, like if a customer wants to delete their data, there might be a possibility like the data has been shared to some of the vendors for scrubbing, or it might be somewhere else apart from my own database. So how come we can identify those things? And because we are using AI agents as well, so sometimes without or having what is it, very deeper search, then only we will be able to find out like the data is being there in their system as well. So how come we can ensure all the erase happens as such?
That's the first one told about I keep my heart out when I write to the customer, right? Because data dictionary, so first step is data discovery. And then you do a indexing of the data and then see where your footprints are. And then you try to fine tune the data, right? Even today, when I have to cross sell my product to another customer, I need a consent from the customer also, saying that you purchased a gold loan from my company. I'm trying to sell you another mortgage loan. Is that okay with you? I'll be using your name, email ID, phone number, etc. with you for doing this purpose. So that lawful consent is important, and then how to use that data. Today, I'm agree with you, I have the same challenge in terms of identifying the complete footprint of data. But at least what I will do is that from my database, from my logs, and from my transactional CRM system, wherever I have footprint of data, I'm trying to ensure that it's all purged, archived, or at least masked for that matter. Then I will say I will using only for the lawful, willful purpose of a customer, what I've obliged with. That way we're able to handle the situation now, but this is a pain, and there are many solution providers now in the current market who are able to address that pain point, but it's only addressing some part of the problem, but not the bigger problem. So it is something you're trying to repair a vehicle on the move.
Because co-lending also, it has been there, like
Yeah.
two lenders has been provided, but since I am the main vendor, main loan provider for that customer, he will raise the erasing request only to me, not to the another co-lender.
Absolutely.
So that kind of.
Yeah.
If you ask me technically, answer is not. Because I have already taken your backup 2 years back when you took the loan. It's in the tape. So digital footprint will not die. We will die, but digital footprint is there. You remove your, so I used to be on Facebook when it was launched. So I'm no more in social media other than LinkedIn. All my footprint is there. Still it has, to my connections, it still shows when is my birthday. So my anniversary, everything it shows. So long story short, all your data that is backed up in the bank 2 years back, I have tapes. So we retain it for 10 years. Okay,
We
so
are in
that's the
damage
truth.
control mode.
That's
That
the
is for
truth I'm
sure.
saying. I'm talking in right now. I don't wear a banker's hat and I can speak the truth. So data doesn't get deleted. Any act coming in, it will be all on paper.